There's so much theoretical content out there around property, but in today's video, I'm going to be breaking down a real deal and how much money I made from it over the last 3 years. So this property is a 2-bed terrace property. It's Heathcroft, and in fact, don't know if you can see this, is in that picture there where we just reached 10,000 views, me and Alex in the property. It was £78,000 at the time, around £2,400 spent on stamp duty, £1,500 in legals, and around £12,000 in refurbishment costs. So we took it from looking like this, and then it looked like this. 12 grand spent pretty well. At the time, we managed to enhance the value a little bit, but in general, it was worth £110,000. So £110,000 value for little suburban LS11 of Leeds, and it was a 2-bed terrace property. So I've actually got the mortgage rates on this at a lower percentage. If we applied today's mortgage interest at about 5%, it's netting about £2,500 a year. And you'd be thinking, bloody hell, that's a good return on investment, right? Well, you'd be absolutely right in saying that. The money of my money left in this property was £10,500 in the end, and that is a massive 25% a year, which is absolutely huge. So if you think about £2,500 a year for the last 3 years, 7,500. 7,500 divided by the 10 grand I left in, that is a 75% ROCE. Believe it or not, that's not actually where the money is made. If you've been watching for a while, you know that I love boring, vanilla buy-to-let properties, but it's not because of the cash flow, it's because of the capital growth. So pull away from the example for a second. What is capital growth? Well, capital growth is really the economy and the growth of the economy, but applied to property. What the fuck does that mean? Well, two things. Number one, there is inflation. Inflation is naturally when the economy is growing, the value of everything goes up. For example, if the cost of bricks go up and the cost of timber goes up, majority of a property, and then the cost of labor goes up, i.e. the people actually building the property, then naturally the price to build a property goes up. Therefore, we need to sell it for more in order to make profit. On top of that, we have natural supply and demand. In the UK, we have a massive housing shortage, like a crazy level. The government is not keeping up with development. They're not helping developers enough. And so we're not even hitting our yearly targets to even keep at the same deficit. So the deficit is getting worse and worse. At the time of filming this, it's over 1 million units. 1 million unit housing shortage. What that means is there are 1 million adults looking for a property either to buy or rent in the UK that don't exist. How stupid is that? Bad for you if you don't own a property. Good for you if you're on the property market. Realistically, you might have heard some people out there going, you'll own nothing and be happy about it. That is the economy we're moving towards. In 20 to 30 years, I genuinely do believe that buying a property to live in or even buying to rent will not be available for the average person because we'll be priced out the market. And if you're in any area where there's build to rent developments going on, you know what's coming. So if you own property already or you're getting in the game now, and when I say now, I mean the next 6 months, you're going to be a very happy individual. So going back to Heathcroft, how much capital growth was there? So this is where it gets interesting. The capital growth is £20,000. Now remember, we left in £10,000. That is a 200% return on that money. Now, even if I didn't refinance and pull it out, which I did, which is why I've got less money left in, by the way, that £20,000 increase is over a 3-year period. So it's gone from 110,000 to today's new value of £130,000. That is how you make money in property. So let's apply that logic. So it actually works out as an average of about 7% a year capital growth. But let's apply 5% so we can understand the economics of property and what you need to do to actually get these. So let's take this property of £100,000 right here. So let's say 100,000, you're going to put in a 25% deposit. So £25,000. You're then going to have fees on top. Let's say you're all in with the refurbishment, stamp duty, fees at £40,000. That's including the deposit. Now let's say it goes up 20% over 3 years. Mine went up 20 grand. Let's apply 20 grand to it. So if it went up 20,000 over a 3-year period, you would go, I have made 20% on my money, right? No. In fact, what's happened is you've made 20% of the value, but you only have £40,000 cash in the property. So if you've made 20,000 on that 40,000, that is a 50% return over a 3-year basis. What I'll tell you on average, by the way, is we're able to treble somebody's investment over a 10-year period. I'm going to say that again. If you have £100,000 cash to invest, we will be able to get you multiple properties over a 10-year period. More importantly, I'll turn it into £300,000 cash net worth, and it will be over a £1 million portfolio. Now, how do you actually create that? Well, it's isolating it to the best areas in the UK. A little plug here, by the way. If you didn't know what we do at Aspire Property Group, our whole game is building portfolios for everyday people like you. Building portfolios, they don't need to be multi-millionaires. You have to start with 1 or 2 properties. So if you've got £50,000 to invest or more, and you don't want to screw up your first investment, you need to tick the boxes and get it right and benefit from getting the best areas in the UK, put APG in the comments now. I'll put a link in the comments and I'll pin it to the top as well. But ultimately, what I'm going to offer you is a completely free one-to-one strategy session. So fill in your details on there. My team will give you a call. And what we'll do is we'll go through a bit of a strategy of working out where you're at now and where you want to get to. And if we can help you on that journey, then we'll tell you what that will look like. But ultimately, you've been watching for too long. You need to start building that portfolio. And depending on when you're watching this video, because we've got to edit and send it out, you've got a 6-month window to really take advantage of this opportunity. So going back to Heathcroft, this one property has given me £9,100 in combined returns every single year. In fact, it's given me even more because only the rental income on the net rental is taxable. That capital growth is non-taxable money, meaning the taxman can keep their hands off on about 80% of the money. And the trick to this is making sure you're investing in the right areas. If I were to leave you with one big tip, it's that price is what you pay, value is what you get. Too many newbies in the industry focus on getting a bit of a discount in a really bad area or focusing on high cash flow strategies, which ruins the capital growth prospects of the property. For me, I'm all about the boring, vanilla, buy-to-let properties, getting the fundamentals right, focusing on high value areas that's going to attract a level of demand that is always above supply, so you get a long-term return on investment. As I said to you, if you want to make sure you've got this right and you want somebody to take care of all of it, we do that at Aspire Property Group, where we build your portfolios hands-free. So if you've got 50,000 or more and you want us to help you build your portfolio in 2024, click the link that I've put in the comments. I've pinned it to the top for you. And if you can't see it, put APG and we'll have that one-to-one consultation and help you make 2024 your best year yet. If you got value from this video and you're not subscribed already, make sure to destroy that subscribe and the notification bell. And if you've got 2 seconds, tap the like button and I'll see you in the next video.